Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar remains to a bearish sentiment after taking out the support level of 67, 65, 75. In light of that, has exposed further weakness that could see the market tumble towards the region of 66, 60, 65 before turning around. From a technical outlook though, the market is negative and therefore from a weekly and also from a daily time frame could see that weakness soon turn around from that region of 66, 60, 65 and rebound. So I'm not going to get negative towards the bottom side of the range. I feel this is an opportunity that could see a bullish correction very soon. Euro drops to a 20-year low while its rival, the US dollar, rallied to a 20-year high on Monday. The market rallied to 108.06 while the euro posted a fresh low currently today at 10004, with the ADX still trending to a bear case, could see further risk to the downside. But a little caution should be seen as we approach 99.50.95, as we could see a rejection from there and see a rebound back towards the 102 region. Still to come this week, markets will be focused on the US inflationary numbers. And also with that, later in the month of July, we do have the European Central Bank expecting with a 25 base point rate hike. That is on July the 21st, while the Fed is expected to hike rates around 75 base points around 26, 27 of July. In light of the pattern here, though, I feel that the dollar index has overextended somewhat, so a potential rebound is warranted. The dollar yen still rallying and posts a fresh high around 137.50, and at the moment still heading higher. Although I'm holding a neutral view for those who are trading, we could get to the highs around 139.15.35, as the Bank of Japan has expressed today that it still maintains its dovish stance and still keeping ultra easy monetary policy while the US continues to hike rates, which has been put in a bit of a divergence there between the two. Nevertheless, as I mentioned, I'm neutral, but if we look at a broader picture, is that we could still see it pop up towards that 139 due to the technical still remaining somewhat strong, but overbought. The pound crushes the level of 119.10 overnight, and after taking out that level has exposed further weakness, anywhere from 117 to 118 as a potential target. Along with that, it has also negated the Dragonfly Doji from the dailies. In light of the pattern here, a failed break towards the upside for the RSI. So there is further potential to a further slide. But that being said, just be on your guard. Although the market does look bearish, and it tends to at the bottom of the range, as we can see here, when the market plummeted down towards that 114, 116, it shot straight back up. One of these price or candles can eventually do that again, as we are getting awfully oversold. Sterling CAD took out the support level at 155.20, and from that has exposed further weakness. But again, divergence is seen, and therefore I do anticipate support from either 154, 50.55 or 153.75, and watch for the bounce back towards that 155, 156 area. Since taking out the support level of 1,738, little can be said for the price action to the downside, as the market is still slightly struggling with these dojis as indecisiveness, as the market doesn't appear to want to get too short at these levels. And therefore, if we do see a turnaround in the US dollar from the 20-year highs around 108, then we could see a rebound coming back to gold and looking towards 1,742 to 54, with 64, 66 seen as a cap. Until then, though, if we don't see a break above 42, then eventually the market will slide towards its bottom side. That's views around 1,686 to 91, which I do anticipate as a bullish zone. Reason behind that is if we've got a dragonfly doji here, we've got a strong hammer and rejections all the way through this level, and could do so again. Wrapping up with oil, the market is still a little bit soft, and if we do get a close under 99.30, it would reinstate the downside and therefore look towards the region of $92 a barrel as a potential target and reassess from there. We need to close from New York tomorrow, even though we are challenging this level at the moment, and if we do get that close, then it will support a bearish case down to 96.30 to 92.20. Well, that wraps it for today. Thank you very much for joining me. As always, look after the interest rate report. I hope you enjoy the rest of the day.